All right, I think that's it now. Okay, great. So welcome everyone. Thank you for the great interest in what we believe is one of the most exciting topic these days. So we're going to talk today about the art of investing in Web3 companies. So we structured the session into two main blocks. I'm going to give you a very short intro about the topic itself, and in particular also a framework that we developed in supporting, so to say, our clients in navigating the Web3 investment space. But then we're going to go into a panel discussion. We're going to spend the majority of our time today with a very interesting panel with Web3 veterans from all angles, from the investment world, from the startup world, and from the legal and professional service world. So without further ado, let me run you through the topic and why we believe this is one of the most important topics nowadays. So one thing is clear, no matter if the market is moving up or down, that the technology is here to stay. We see a tremendous growth potential in the digital assets and Web3 economy. And don't nail us down if it's going to be 2 trillion, 5 trillion, or 9.6 trillion. I think at this stage, obviously, no one exactly knows. But if you look at the market consensus, then this is kind of the figure you're ending up with. But the main takeaway from this is not so much the figure, but it's the takeaway that there's going to be an immense projected growth. So we have three core beliefs that are going hand in hand with that. One of them is that by 2030, the majority of value transaction is going to happen in the form of digital assets, whether it's going to be in tokenized real world assets, tokenized financial assets, or classic crypto. The second is that the Web3 revolution will definitely change the landscape of the internet, moving from a platform-based web to a network-based web with a lot of value creation and participation opportunities, so a more inclusive version of what we have today. And then the third core belief is that despite all the hype that the metaverse has seen in 21 and 2022, which from my point of view was way too overhyped, we still think that the metaverse is going to become a de facto experience standard for selected industries, but not for all. But it's definitely going to be a big market. So with that projection and this, let's say, exciting future of the market in general, if you look at the VC investments in Web3 companies, then they have been also on an absolute tier. So the total investment volume since 2016 was roughly 94 billion, which is a compounded annual growth rate of 64%. Obviously, 2020 saw a bit of a dip, but still there is a lot of, let's say, movement in this space and a lot of investments that are flowing into the entire Web3 narrative. Now, the problem with that is that despite all the main investments flowing into the space and many seasoned VCs and PE firms going into the space, we saw a lot of issues in particular over the last quarter. So, and these issues ranked from really technology related issues where bridges were hacked, where value was leaked out of applications, out of protocols, but also straight out shocking developments of missing governance and really fundamental issues. So the question we asked ourselves is, how could all of this happen if there was so much, let's say, money behind it and so much interest from seasoned VCs and PE firms in this space? And to cut it short, I think one of the main key summaries of that is that if you look at Web3 companies from a DD point of view, then roughly 60% is your bread and butter scheme that you would do to any company when you do a proper DD. But roughly 40% is very Web3 specific stuff. And this Web3 specific topics are really hard to master for, let's say, traditional investors, because you really need to be enough and in the details to really understand what you're looking at. So there are a couple of key success factors for investing in Web3 companies. These are just a few selected ones. One of them for sure is community and adoption. I think next to having a fancy white paper, so to say, and a couple of wallet addresses, I think it's really important to really deep dive into how big is the community? Is the community focused on building, or is the community focused on pumping, right? So that is, I think, something that a lot of investments fail to differentiate in the past. And in particular, what is the real world adoption of it? Then there are a couple of Web3 specific metrics that are not very usual for your classic technology DD. So you really need to understand what's going on at GitHub. You need to understand the different social media channels that are used by the community, and really understand how this underpins traction and credibility. Then it's obviously also about looking at the tech. Smart contract auditing is one of the key elements. On-chain activity and trading volume, this is something that continuously needs to be monitored. The beauty about the space is that it's actually super transparent if you know where to look, right? So, and I think a lot of lessons learned also center around the point that you continuously need to monitor that for the investments. And then obviously the one of the main key topics is also tokenomics and dependencies. So really being able to understand and dissect tokenomics of the token that is accompanying that Web3 project, but in particular also understanding the dependencies. Because I think, unfortunately, over the past 6 months, we've seen a lot of projects fail, or let's say projects got into serious trouble because they had dependencies on other L1s and ecosystems that were in tough waters. I mean, think about, for instance, all the projects that were built on Solana. They got into trouble by the FTX drama and everything that happened to the economics there. So that's also something to keep in mind. So what we have done is, just as a very high level view, we've developed a Web3 DD framework, which basically looks at 5 main verticals, from market assessment, company assessment, tech assessment, business plan valuation, and the regulatory and risk assessment part. And uses this kind of holistic framework to really have a very dedicated view on the valuation and the traction and the success factors of that Web3 project. Now, if you look at this from a normal DD perspective point of view, the main topics that you see there might not sound too different, but I think it's key to understand that all of these white boxes that you have here have a very, very specific Web3 component in there. Now, having said that, I'm very happy to be joined by a panel of really Web3 experts and veterans, and we're going to use the remaining 50 minutes of the session to have hopefully a very interesting discussion. Please feel free to post questions in the chat, but for now I would just hand over and introduce my fellow panelist, and would ask you to just give a quick introduction of yourself and what brought you into the Web3 space, and what is your kind of angle to the Web3 investment topic. Tracy, would you mind going first? Welcome to the panel.
Thank you so much for having me. Happy to go first. So my name is Tracy Trachsler. I'm the managing director of CB Labs. CB Labs is the daughter company of CBVC, Crypto Valley Venture Capital, which is an early stage blockchain investor. And CB Labs, as the daughter company, is responsible for operating the accelerator, as well as a couple other activities, such as running the physical co-working spaces, hosting events, etc. So we are essentially the quote unquote ecosystem part of the business that interacts directly with the investor network, as well as with the startup network. As for my descent into the world of Web3, it was fairly non-traditional. So my initial gateway drug, if that's what we're going to call it, was actually, it came at a time when I was working for a research think tank at ETH Zurich with a security focus. And we were dealing with a project in the sort of political security realm, taking a look at radar tracking using blockchain for the Air Force. And so that was sort of my first exposure to the tech. I'd known a couple of crypto evangelists before then, but this was my first exposure to sort of the tech itself, and was absolutely fascinated by it, and then followed a good friend into the private sector fairly shortly after. So this was around 2017, late 2017, early 2018. Had the pleasure of then working for a software development firm that did some like bespoke consulting on, amongst other things, also blockchain projects. So got to work on some very exciting things there, and have now been with CV Labs for going on 3 years now.
Great, fantastic, great experience to have you on the panel for the discussion today. Michael, would you give us a quick intro, please?
Yeah, sure, happy to go next. Hi everyone, my name is Michael Kunz. I'm a legal partner at MME. We are a business law firm in Zurich and Zug, and we have we have been active in the crypto space since 2014. I think we mainly came to fame because we helped Ethereum establish their foundation and did the Ethereum ICO back in the day. And so I wasn't there then, but I mean, obviously after then we had a lot of work, and ever since. And so even in the bear market, which we are now apparently still, and the one in 2018, we had a lot of work. So yeah, it's a fascinating field. I'm really happy to be in it. I've been here since 6 years, 5.5 years. And yeah, how did I get into crypto? I'm actually an IP lawyer, and I worked in the United States, and I wanted to come back to Switzerland, and I did actually apply here as an IP attorney, and they have so much work in the crypto space that I, hit the ground running, and I had a few months back to prepare myself for this new venture, and so I spent a lot of time on Reddit, and still do that, and dive into Discord servers and do all that. So I would say I'm kind of like a degen in a way. But I love the space. It's fun to really I also like to follow what's happening in the space, in private. So yeah, so much happening, and I'm really happy to be here.
Great, fantastic, and looking forward to the legal side of things when we talk about the investment part as well. Kerstin, over to you.
Yeah, pleasure to be here as well. My name is Kerstin Eismann. I'm supporting HV Capital as crypto advisor. So we are also a very large early stage and growth fund based in Munich and Berlin, Germany. I think operating already for 22 years now with more than 2 billion assets under management. So we always found Web3 to be super interesting and did adjacent Web3 investments already in the past, for example, Upwest or Solaris Bank. And last year, yeah, I'm so glad for that, we expanded our investment thesis into Web3. I personally ended up in blockchain and crypto in 2011, shortly after the financial crisis, when I was with Fardad Bank, and I got intrigued by Bitcoin, and we are the 99% movement, and it's like history repeats itself those days. Then after a few years later, I joined Energy in 2017, which was the green daughter of RWE, and this was when things turned really serious. I led the machine economy lighthouse, which in essence was a blockchain incubation and investment arm. So with the idea in mind that the future customer of a utility will be a machine trading energy back and forth using a decentralized tech stack, we invested back then in companies like Ocean, Polkadot, EnergyWeb, Neufund, Ocean, Fraction, and other companies back then. Yeah, happy to be here today. Very exciting.
Great, thanks, Kay. Looking forward to your insights from all that experience. Akshit, over to you.
Thank you, Pierre. I'm Akshit Adani here. I'm part of the global digital assets Web3 and Metaverse team at Roland Berger. I was first introduced to the Web3 space on a more personal level back in 2018. As most people, I tried to get into crypto mining, but slowly started to understand the real ethos behind the technology and the entire space. And since then, I've been involved in the space, from building centralized solutions like exchanges to also working with the more traditional government entities and large MNCs, whether it's on understanding investment cases and setting up Bitcoin mining facilities to metaverse monetization plans to ideating new Web3 solutions geared towards sustainability. So all in all, very happy to be on this panel and also great to be a part of this movement. And I'm sure we're going to have a great discussion today.
Thanks, Akshit. For that, great to have you. Quick intro from your end, please. You're still on mute.
Sorry for that. I was telling Pierre, thanks for having me on the panel today. Hi, everyone. My name is Fardad Zand. I'm the CEO and co-founder of Wisdomise. AI-powered wealth management. In principle, why I ended up being in Web3, this backs to during my postdoc study at MIT 2010. I was working with my professor, with an advisor to the company at this point in time, looking at the so-called knowledge markets. So we had the idea of how to tap into the wisdom of crowd within the boundaries of company, and how we can actually connect that to productivity and business metrics of companies. Of course, we were not smart enough to realize the potential of blockchain. Actually, I didn't know about blockchain in 2010. So we were primarily looking at the virtual coin in the form of kind of old-fashioned kind of loyalty point, and how we can build such a kind of market. Longest story short, my kind of deep journey in Web2, I realized that, okay, blockchain actually provides me the opportunity to do what I was planning to do 10 years back. My exposure to Web3 started in 2015 as a casual trader. I gradually become a more active trader in digital assets. And then lately, 2021, I left Uber and set up Wisdomise. Primarily, we're looking at developing AI-based financial solution that helps retail and institutional investors getting exposed to digital asset. And by the way, we have a plan also to make the bridge and get into other non-crypto asset classes pretty soon. So glad to be here.
Thanks for that. And then Melanie, over to you.
Yes, thanks so much for having me here. And so, yeah, I'm a founder in this space, Melanie Moore, founder of Warm Protocol. I'm coming actually out of 20 years of media marketing and mobile tech industry. And my entrance to the Web3 world was classic through Bitcoin. After I discovered it for myself, unfortunately too late, or late in 2016, I decided to go down the rabbit hole and educated myself in 17. And in 18, I thought, okay, now I have understood the fundamentals, and I have seen all the flaws also in my own industry, in the marketing and advertising industry. And I decided to also build in this space and build a protocol layer around word of mouth marketing, the so known best form of marketing, a good replacement for ads. And so we have decided to build a whole protocol layer that can integrate into all media platforms, e-commerce platforms. It's basically Web 2 and Web 3 agnostic, and can replace the advertisement build revenue model in all of these platforms, and deliver better content based around product recommendations that nowadays anyone can do, and anyone should be fairly rewarded for the value when someone is falling in love with a product, sharing this product love, being a brand advocate, that he or she can also get fairly rewarded for this brand love that he or she is spreading. And meanwhile, I'm also a little basically angel investor in this space, and I'm part of some funds, and I'm seeing also a lot of deal flow. So this panel today, definitely I can kind of see it from both sides. On the one hand, from a founder side, how it is to raise in this space, raising funds in this space, and at the end also how it is to invest in this space. And I'm also a very proud senior advisor to Roland Berger since some time, and helping a little bit assisting the team in Web3 and metaverse strategies.
Great, so fantastic to have all of you here. I would say let's cut right through it to the main topic of the conversation today. And Kay, I would like to start with you. You've seen a lot of, let's say, projects over the past years, and you've seen the sector grow. So what are the things that you look out for when it comes to DDing Web3 companies?
Yeah, that's a super important question. So I think it's at the end, it's still very simple. So for me, the team is super important, no matter if it's about Web 2 or Web 3. So I really need to understand if they have the right skill set. Do they have access to the industry they want to disrupt? For example, if you try to build clean tech startup, let's say a decentralized marketplace for carbon credits, without having any access to stakeholders, to the clean tech network or the banking sector, that's for me a no-go. So I really want to understand if they have some connection to the industry already. And then the next thing is also very simple. It's a product market fit. Do they really solve a problem? And what is the market size of the problem? And then you have mentioned that already, it's about the community. So one of the first things I usually do, I check their Twitter account, Discord or Telegram group. And if they have below, let's say 100 followers, for example, on Twitter, I get a bad feeling. So chances are pretty low that I take a closer look. And then, of course, it's also about the tokenomics. So, for example, what I find super interesting, if there is a buy mechanism in place, let's say a startup tries to use a portion of its revenue to buy back tokens from the market. And so this is, for example, for me, one pattern that there is a correlation between the revenue side of things and also the tokenomics part of that. So also when it comes to the how the token value itself accrues in value over time.
Interesting, very, very good points. And I saw Melanie nodding and smiling, because I think we had some discussions around that 2 weeks ago. Melanie, what's your take on that?
Well, I mean, I would say it is, you know, a little bit difficult when we're talking about the community. And I think you mentioned it in the beginning. We need to divide between what are really the community members that are inclined to really utilize the product. And where at the end, I would say every Web3 project that is somehow issuing a token, and when we're talking, these are not security tokens, these are utility tokens, then yeah, the utility should be in the center of everything. And obviously people who are getting early access to these tokens should be ideally the ones who really want to utilize the utility and want to utilize it. And for that, they need the token. And this is currently, I would say, a kind of an issue, because all of these concepts are very early stage. And some of them do not even have a product yet or haven't launched anything yet. So we cannot even determine if they are going to find product market fit. So there are in the beginning, very often, a lot of tokens, sometimes too many, in the hands of the speculators versus the real potential users of the product in the future. And so I would say, when we are, for example, what was previously mentioned, looking at the Twitter account, yeah, on the speculator side, I'm also seeing, yeah, it is better if a project already has some, you know, some Twitter followers. But still, we know this doesn't mean, you know, that these will be users, yeah, of the product. And this is where I see the biggest challenge for all of us to evaluate how, talking about the go-to-market strategy, how is this team really effectively bringing a product to life and also to market, and really to the people who will use the utility and the token.
Great, thanks for sharing that. And then Tracy would also be interested from your point of view, from CV Labs. What are the things when it comes to DDs, what you're looking for? And maybe what are things as well that you looked for and they turned out to be different than you thought at first glance?
I mean, happy to echo the sentiment in and around team. At the end of the day, that's sort of the core or the heart of the project. But maybe looking a bit beyond that, it's also worth noting that on our end, our focus traditionally is on the application layer, which means that we're investing less in token-based projects and more in projects that are developing tech stack, applications of blockchain in a lot of different industries that most often do not involve any sort of token at all. So they're building solutions for supply chain, they're building solutions for real estate, they're building solutions for pharma or for online advertising, et cetera. And there's often no token involved. And on that end, I think a lot of the DD looks similar to what you'd find in sort of classic VC, right? Looking at the business plan, looking at looking at the technical feasibility, looking at, is it the right idea at the right time for the right market? One of the things that we, coming back to sort of the team angle, I think is very important is, do we believe that this team will be able to pivot with the product if necessary? More often than not, particularly because we're so early stage, the product that actually then eventually ends up in the market is very different from the one that they initially envisioned, for example, when they start our accelerator. So there's quite a bit of product tweaking, et cetera, that goes into that initial phase. And are they willing or able to do that? Are they so married to one version of the idea that they won't be able to develop it based on the feedback that they're getting? So I think that's a particularly important component. And then the other one is timing. You can have an excellent product, but if from a regulatory perspective, for example, we don't think that this is implementable in the next 12 to 24 to 4 years, it really just depends, right? Is the regulatory framework in place to support the solution's actual market entry? Is the end user ready to receive it, right? If you're dealing with like an online advertising platform, do we believe that publishers now are ready and able to use those API plugins and incorporate the solution into the existing platforms? So it's really sort of the team is the base layer, but there's so many different factors that come after it: the timing, the market readiness, the ability to listen to feedback, et cetera. So it's sort of a multifaceted approach, I guess, is how I would put it.
All right. Yeah, very, very interesting points as well. And I mean, in particular, I think we're going to pick on two. One is the team part, which I'm gonna address to Fardad as well. But there's another one on the regulatory side, which I'm going to address first. So Michael, from a legal point of view, what was your experience so far with startups or protocols being ready for a regulatory environment, and what were kind of lessons learned that you can share on that?
Good questions. So, maybe before we start, I think one thing that is really important for us is to weed out the bad actors. And I think one main advantage that Switzerland does have is that we have a very solid regulatory framework that I think you find nowhere else in the world in that form. And it's funny when you see what's happening in the space, FTX and other examples, things are breaking down, stable coins that have issues, and then you have all these investigations going on. We do have the benefit that we actually can, get in touch with FINMA. We do actually have right now, we know how to set up projects in a way that we know we're not going to run into issues. And I think that's really a plus that we should be very proud. And we have that in Switzerland. Now, when you look about investments, I think it was mentioned before, I think it was Tracy, but I'm not sure anymore. So the deal structure can be very different, but I think in most cases we'll still have token deals, right? Because you started in 2017 in the ICO phrase. People found this beautiful way of making money without actually giving away equity and without having to pay back the money they raised, right? So before it was basically, you sell equity or you raise debt, right? And here you have this wonderful way to actually sell a token and just, tell people I'm going to sell a token and you get a lot of money for it. And so I would like to focus a bit on these token deals because I think there's a lot of things we have to keep in mind from an investor perspective. So, first of all, you have to understand what the money is really used for, right? So most of these contracts are basically set up as token purchase contracts or token sale contracts. If you're actually one of the early ones and you get access to it. And I think that's usually not correct, right? Because the token is it's created within a matter of seconds. It has no value whatsoever. It only gets value once you actually have the community, you have the product and all these things. So you should focus more as an early investor to actually really stress the point that I want to understand where the money goes. Because in a sales agreement, you just buy a product and that's it. You have warranties attached to the thing you buy. And the token, if it's functional, there's no warranty issues you have a token. Now later on, you can say it was never really usable, but that's what you buy, right? You don't buy the right to use the token or the fact that they're actually going to use the money to build a product. You just buy a token alone. So we have therefore very early started on to not actually do token sale agreements early on. Later on, yes, in the secondary market, sure. But instead, have some sort of early contribution agreement where we actually have more commitments from the project that we advise to say, look, these are all things you're going to do anyway, so you can actually also make promises. because we want to set a standard there to be a bit transparent about these things. Another thing that is very essential is token functionality. And people become more aware of that. And they talk about, payment token, utility token. I mean, these are classifications. But the key question really is that, can you actually use them for anything? And so often they say, you can use it for governance. But you have to think, why is that valuable, right? Why is it valuable that you have a token that allows you to participate in governance? That alone, doesn't justify a $10 billion valuation, right, necessarily. So think about what the token really does and be a bit more skeptic whether a token is really needed, because we still do a lot of projects where we say, look, sometimes tokens make sense, but very often you really don't need a token. Use a stable coin instead if you want to have payments on the platform, and then yes, you have to sell equity, but I mean, it's not too bad, right? Others have done it too. So, well, that's something that I would look forward to. Maybe, to round this up, some risk issues that you should also keep in mind. I mean, first of all, you have the irony of a lack of trustlessness, right? Everybody talks about trustlessness and trustless systems, but here what you do, you give money and then you hope to get tokens later on, right? So it's basically a tit for tat. You first give money and then you really hope that money comes back. So yes, do your due diligence, figure out that you really want to trust the team, and that's not something you can really solve contractually, because oftentimes these teams are outside of reach, they're in the Caymans or elsewhere. So it's going to be tough to go after the money if they don't deliver. But some specific risks to keep in mind on top of that is, obviously, you can lose all your funds. That happens, right? It has happened to many people. It can happen because you lose your keys or you put it on FTX or elsewhere, and the funds just go away. So there's no way to actually recreate those assets. Once they're gone, they're usually gone. Another thing is smart contract risks, which has been mentioned in the past, which I think is essential, because I think a diligent investor should actually really find out how many smart contract audits have been done, how many will be done, and by whom are they done. I think it's an absolute essential part. We've seen so many hacks happening over time, and it's going to be very difficult to actually go after the money, because, I mean, a hack is still a criminal act, and therefore it does not necessarily like a contractual violation. It happens. It's really just like an accident in a way, right? So you have to be prepared for that. And the last point I would like to stress is regulatory risks. So most people don't really care about that, but I think it's absolutely essential. Ask the team, have you engaged a law firm? Have you done what's needed to actually get your regulatory permits? Can you share any documents that you have? Do you have any memorandums? Do you have anything to understand? How do you plan on staying in the jurisdiction? Why do you choose that jurisdiction? Why are you in the Cayman Islands, in BVI? Why are you not going to Switzerland? Why you're not going to somewhere where we actually have a strong regulatory frameworks? Yeah, so I mean, I could go on, but I think.
No, good. Thanks, Michael, for sharing these very valid points. We have a couple of questions in the chat as well, so just want to ensure we're going to tackle them, but bear with us for a few minutes. I want to pick on the point that Michael mentioned on the tokenomics, and Akshit, we have been looking into a lot of tokenomics analysis in a few of the DDs where we've done. So what were your main takeaways for that? What's important when it comes to tokenomics?
So I think firstly, it's important to kind of highlight that tokenomics or assessment of tokenomics is not a static one-time review sort of thing, but rather a more dynamic ongoing process where you need to constantly reassess and review the tokenomics. And kind of once you've done that, I think the core element, I mean, of course, tokenomics is such a large part of this space, but there are some key questions you need to constantly ask yourself as a startup, but also as an investor. Firstly, is that why a token? Why do we even need a token? Is there a clear thesis behind it? And once you already have that, what is the utility that the token actually provides? A token for the sake of token, as everyone here has already kind of mentioned, doesn't really add a lot of value. We want to look at, how can we kind of ensure that the platform participants are kind of incentivized to use these tokens beyond a simple use of governance or for speculation. So there needs to be some genuine value to the platform. I think once we look at that, we should also really understand, what is the initial token allocation, the vesting period. And this also kind of ties back to what Michael said, that, in initial phases, you don't really want to be offering token purchase, contracts, because you want to really be able to see what is going on, how these tokens are distributed. And this also kind of links back to what is the token model and is it sustainable? We want to be able to see this model kind of thrive and be alive in the ecosystem on its own. We have seen a lot of examples, for example, with Celsius, growing significantly on such a short period of time. And then the moment we were in a more stressful market, the entire staking reward model collapsed. and the platform wasn't able to kind of continue or maintain this reward screen. So it's important to understand and also give it time to see if this model can actually thrive in the ecosystem on its own without kind of interference from the initial kind of developers. And then also, of course, I think the most important part that we kind of always look at, and also probably the most generic one, is the token supply and demand. But not just the total supply and demand, I think, because when we look at the total supply, you have the two biggest projects that we can look at, Bitcoin and Ethereum, completely different approaches to token supply. One is capped and one is kind of constantly ongoing. So it's not just about the token supply, but also to make sure that the supply and demand is built for purpose for the platform that you're working towards. Because there's no right or wrong answer. It's just about being able to customize it in a way that it makes sense for your platform users and ecosystem members. I think also beyond that, maybe just to quickly add, it's also, of course, important to understand the initial supply of the token. There is always this kind of, approach that when you first come out with your ICO, ITO, you want to have a limited supply. Generally, we see something around the range of 2 to 7% to kind of create the scarcity hype, drive the FOMO. But I think this is also something we often see, that once the FOMO wears out and the token supply keeps increasing, it's really hard to maintain the price unless it's backed by actual, genuine, solid use cases. So I think it's important to kind of make sure that we're looking at long-term sustainable growth and we don't kind of compromise that for short-term token price appreciation. I think, of course, we can keep going into this in as much detail as possible, but I think those are the kind of key elements I would at least start when I'm looking at a new project.
Thanks, Akshit. And I think we've all seen the classic kind of price chart curve of a classic rug pull kind of movement, with after token issuance increased spike, and as soon as people are ready to divest, then they dump on retail. Fardad, I want to come to you now, because you're representing, so to say, the startup world together with Melanie, and you have been obviously in the first line of the battlefields when it comes to discussions with VCs and so on. So what are things, and let me phrase the question a bit differently, what are things that VCs haven't asked you that you feel they should have put attention on that?
Good question, Pierre. I think on that, let me start with seconding Melanie on the overrating of community. Of course, blockchain is meant to promote decentralization. But to me, maybe I'm like too far in that respect, but to me, the number of followers doesn't mean anything. Right? I can bring you millions of followers tomorrow, and they're gonna wipe out the day after. We all know about even L1 protocols and apps that used to have 50K plus followers, and then that was gone after three months, right? If you look at the interaction on most of these communities, they are there because of incentive, right? As long as you stop incentive, as long as you stop throwing out airdrops or free tokens, they're gone, right? The conversion from those followers to actual users, what did that mean, right? I would rather having 1,000 followers, 20% of them are the actual users of my product, versus having 1 million followers, where less than 0.1% of them are actually users of my product, right? So I think one big conversation with VCs, and this is typically the case for Web3 crypto specialized VCs. I mean, you don't see that much with like classic Web2 VCs or even general VCs. But I think the hype of community, I'm not saying community is not important, it's super important. But the quality of community is way more important than the size of community, in my eyes. I think that's one area that I'm not necessarily in line with some VCs that I have been in touch with. The second thing is the nature of product. I still believe, and with all due respect, I still believe that the average classic Web2 VC looks at product in more details than the average Web3 VC. If we are about to actually classify VC in Web2 and Web3 conduct, if that's a correct classification, right? In my, again, Wisdomise is my 9th startup, right? So my last 8 startups, I've been dealing with Web2 VCs. In this one, I'm dealing with both Web2 and Web3 VC. And I can tell you that the rigor and the depth of technical due diligence and product due diligence that are witnessed with Web2 VC is way more satisfying. Again, it's more challenging, But at the same token, it's more satisfying for an entrepreneur compared to Web3 conversation on average. There have been very deep Web3 VCs as well that I've been in touch with, but I'm just averaging the population. Next topic is about the general perception of Web3. When I entered Web3 and I started building something, it backs to 2021. I was designing the product in a way, and I was typically getting the feedback that, oh, no, that's not the common UX UI in Web3. I said, what is common UX UI in Web3? Who said this is the common UX UI Web3? Because the old guys have done it this way, does it mean that this is the norm? Why is it the case? If something doesn't make sense, it doesn't make sense. We don't care who did it. And when something makes sense, we need to promote it. I already can see the movements of some best practices from Web2. Web2, we're talking over 30 years of experience. It's not overnight, right? Of course, the experience we have from Web2 these days is completely different from that of 1995, 2000, and so on and so forth, right? So dismissing all that best practices and opportunities and just trying to reinvent the wheel all across the board, I think. And I already see some when fund and VC try to mimic that kind of mindset and try to be more Web3-like a thing. But again, I don't necessarily agree with that. Last but not least is about the team. Of course, building something in Web3, you need to have some deep experienced Web3 guys in your team. It goes without saying, right? If you're doing a smart contract, you need a strong smart contract developers, right? You need to have people helping you with security. Even if you do it outside audit, you still need someone inside your team to take care of it. But again, and I can already see the shift after all these crashes in the market. 2020, 2021, I was presenting my team, and I'm just like an example out of many. The typical topic comment I was like getting was like, hey, you're like too small Web3 experts. I'm like, I don't need more. Why should I need more? I'm like 2-3 blockchain developer is enough. Why do I need an army of those guys? Blockchain development is not rocket science at the end of the day. If you look at the size of the code, why do I need like 10 times more? And the experience of Web2 folks getting into Web3 was simply missed. Why it was simply overlooked. I already see the trend changing. And these days, talking to VCs, they actually appreciate someone having deep relevant experience in Web2, now doing something maybe relevant, adjacent, or similar in Web3. So I think I see that as a kind of positive movement in general.
Thanks for that. Thanks for sharing that. Melanie, you've also seen the side of being a startup, talking to a lot of VCs. What were the questions that you think they should have asked and they haven't?
To be very honest, I do not have to add so much because Fardad is kind of spot on. I made also the same experience. But at the end, also what Michael said, you know, does the project really need a token, right? I mean, this is the this is the core question, yeah? Why do you need a token, right? Where is your economy paper or platform paper or besides the white paper, right? The white paper should be something different that should kind of outline the core of the product and the roadmap and the team and obviously answer all these core questions. But at the end, we should not only look at tokenomics, how many tokens are sold to whom and when is the lock going up and when is the vesting going to start and so on. We should really look into why this project needs a token. So the tokenomics should have more layers than just, you know, who is getting tokens first and how are they going to be distributed over the next year. A project should have longevity and therefore if the core question cannot be answered why it needs a token, it doesn't make any sense. I mean, doesn't mean that blockchain doesn't make sense because there are good projects out there that do not even have a token, right? However, what I'm missing actually now in the investment space and is the good old ICO, to be honest. It was something that failed failed badly in 2017 and 18. And we have seen obviously too many scams. I wouldn't even say that everything, was a scam. It was just the wrong concept and the wrong architecture for getting basically early access to investment opportunities, to support a project early on. And then too much money went into the hands of too unexperienced founders, probably, and some obviously also bad actors. But the concept itself wasn't so bad. Distributing power early on to community members, giving them the right incentives to hold and ideally to really participate and to believe in the product and in the project and be ideally early users, early alpha beta testers. And we then, after the failure in 17, 18, we said, oh, ICOs are bad, ICOs are bad. Well, the concept wasn't bad, the execution was bad. And actually, we have something that should be used to create ICOs in the right way, which are smart contracts. That's what they are made for. And I think this is a missed opportunity. And I hope that we are seeing basically a new era of a new form of ICO, whatever they are going to be called then, where smart contracts are making sure that a team that is coming out with a product is delivering, that milestones are kept, and that money is distributed in the moment the milestones are kept and reached. And I think sorry, call came in, should have turned this off. And that's what we really should now revisit, besides the VC funding. Because what we have seen now, the failure of ICOs, I would say we have seen also failure of VCs. And this was the case in the last year, all these meltdowns and FTX, I would say, was one of the great use cases of a big failure of VCs and due diligence that was missed. Because the retail investors believed in FTX, also because these big venture capital funds were backing them. And that was giving such a confidence in the market that they said, yes, FTX is the greatest and the best. And yes, of course, we are also buying the token. And I think this has shown that, what Fardad said, different due diligence needs to come. This is what I think Roland Berger is also working on, to ensure that this can be done more diligently. But at the end, I'm also hoping for a revisit of the ICO and an improvement and evolvement of it.
Thanks, Melanie, for sharing that. Yeah, and indeed, there was also a question in the chat from Samir exactly addressing this. If we would ask the investors of FTX, Celsius, and Terra if they would have done a proper DD, I think the market gave the answer to that already. But I think one point is important to underline, that it's a lot about continuity in assessing. So it's not only a snapshot at the time of investment, but really continuing it. Okay, I would like to ask you about it as well, because I mean, you have been in the space for so long. You've even been part of the original DAO, so to say, and you've seen the entire ICO movement. So what's your view? Will we have a comeback of the ICOs? And if so, in what form? What would make sense?
No, I also want to give kudos to Melanie, because this was the idea, because I was so excited about Web3 and blockchain back then. This was a reason why I thought, wow, I need to look at this. When I also participated in the DAO. Well, I lost some money, then I got it back. The idea was great. And also in 2017, when we supported the Polkadot ICO, I think what I'm observing is that a lot of VCs in the VC community, they now have the tendency to say, we only do equity investments, we don't do any token investments any longer. And this is for me like going backwards again. Yeah. You cannot drink water without getting wet. Yeah. So you also need to embrace this new technology, that it's about providing access to capital to involve the community. And what I also wanted to mention is this super interesting incentive machine. Blockchain was made to incentivize people to do good, to For example, I came across a startup where if you donate your health data in an anonymized way, you get their tokens. Or if you recycle plastic, then you get also tokens. We don't need to discuss in detail now if that's really working on it, but I like this overall idea of the blockchain-based or token-based incentive machines. And this is, so back to FTX and Celsius, I don't think that I would have found those companies to be super interesting, because what they have been were just centralized fintech companies, or some even would call them fake blockchain companies. So we, or at HV Capital as well, we try to focus more on projects that have a true decentralized vision incorporated into their DNA.
Great, thanks for sharing that. There's one question about the team and the ability to pivot, and there was a question about, isn't that a bad thing to say that if a company is pivoting? Tracy, you brought it up. What's your take on that?
No, I think it's a question of to what extent can you take feedback from the market and alter your product in order to reflect that feedback. I think it doesn't have to be to the extent of Nintendo, for example, that initially started manufacturing, I believe it was vacuum cleaners, and then a long road led them to gaming consoles. That's not the expectation, right? Very few companies can endure a pivot quite that extreme, and that's certainly not what I'm saying. I think a good example is Flickr, for example, right? The initial product that they launched was one that was very much geared towards like an online game, and what they ended up discovering was that actually the fact that they had this peer-to-peer image sharing platform as part of the game was by far the most popular feature, and they ended up adapting the platform to make that their core business. So I think that's the idea, right? To what extent are you able to take feedback from your users? To what extent do you realize, maybe this isn't quite actually the product or the market that you're developing for, and endure that sort of feedback loop and make the changes and see, how that alters your business plan, et cetera. Again, I would say for most entrepreneurs, the way forward isn't straight. You have a lot of different feedback points that you get. And the pivot doesn't, again, have to be extreme, but you have to have the ability to incorporate that feedback into your product. Absolutely. I think that's key.
Great, thanks for sharing that. So we have 7 more minutes to go, and I would like to ask one more thing to Michael, knowing that this question would deserve an entire webinar on its own, and then we're going to do a short round of single answers as well. So Michael, obviously with the entire discussions around tokens and is it a security, is it a utility, and so on, what are the things that you think VCs and founders, when designing their tokenomics, should be careful to be at least future-proof? Or if they go down the route of a security, how early do they need to make that decision?
And that's a very good question. I think you're right. I mean, we could have a whole webinar about that. And it's also something we talk very often about with clients. So, one thing that is important is to understand that we're in a global space, and every regulator has its own views on, what token qualifies as security. Obviously, we all know the SEC. And we all know that they don't really know what they want and that they think everything is a security, which makes things very difficult. So we always urge clients to talk to you as counsel as well, to figure out how they can actually make sure that tokens can be sold without triggering securities laws. And there's exceptions available. Unfortunately, this usually leads to a situation in which you cannot actually sell tokens to retail investors, which really goes against the premise of, the democratization of investments with blockchain, et cetera, which is a bit sad, right? So most of our clients actually say, it's not that essential for us. We don't really want to go down that route, so we just cut them out. I think that's a very first decision you have to make. Do you want to include US persons or not, right? And very often they just say, well, it's not an option to exclude them because they have the deepest pockets and we just need to access the VCs because there's so many of them are there. Sometimes there's ways to actually, they have, affiliates or other companies that can do the investment instead. But it's a slippery slope, right? So that's something you should keep in mind. if you're in Switzerland, so that's what I can say, it really depends on individual functionalities. So we often advise clients to omit certain functionalities to make sure that a token doesn't trigger securities laws. And the reason why that is not necessarily from an issuance perspective, right? In Switzerland, you can issue a security token quite easily. You can actually also, and depending how you set it up, you can actually also distribute it quite broadly. But you always have to keep in mind that it has implications for the secondary market. And that is essential for the project team and also for investors, because whenever you want to list a token, you will have to go, or you will have to sign a very unfavorable document that requires you to warrant and represent that your token is not a security anywhere in the world, right? So if you want to be listed, you have to make sure you're not a security, right? And otherwise, you're just only going to be existing on decentralized exchanges, which sometimes works out, right? Sometimes that's okay, but it makes it much harder to get liquidity into these systems. So yeah, I think it's essential to talk to you as counsel. I think it's important to think about, can you actually omit certain token functionalities? I mean, obviously, one of the key ones is distribution of revenue, which is something that a lot of DAOs want to do. And for them, it's actually a bit an issue because they want to make sure that the revenues by the DAO are distributed to the token holders. But yeah, I mean, to answer your question, do it at the very beginning. It's one of the key questions you have to answer when you want to issue a token.
Great, thanks. We have 3 minutes left, so I would ask all of you one single question, which is basically, we've seen the narratives in Web3 VCs being chasing a hot topic after hot topic from DeFi to metaverse and so on. So in your mind, not financial advice, what is the next kind of big topics in the Web3 space? Just one topic. Maybe Fardad, if we can start with you.
I would say, Pierre, let me talk about two of them. Right? I think one would be regulation. I expect we're going to see more regulation and licensing requirements are going to come to the space, both CeFi as well as DeFi. That's my prediction. And the second one, I think the ownership of data and privacy is also becoming a more kind of important topic within the Web3 space.
Thanks. That would be music to the ear of Bruce and the Ocean team, who are not with us today. But Kay, what's your take? What's the number one topic?
So what I personally find super interesting is the decentralized science movement. So there are so many inefficiencies in the scientific industry, like missing access to funding, missing access to knowledge, to peer reviews, and to compliant data. I believe those challenges can be addressed with Web3 as well. And it might be that in 2023-24 that there's a big momentum for this so-called DeSci movement. Let's see.
Thanks. Tracy, what's your view?
I mean, the lovely thing about our industry is that it covers or has touch points with so many other industries. So I think there's like 1,000 different things that you could name that are relevant for each of those. But maybe just what we see in particular, sort of in the near term, is that in the aftermath of a lot of the negative headlines that came last year, we anticipate that we'll see a lot of, let's say, more mature service providers that are aiming to link up sort of the traditional financial space with the digital asset space, and sort of all of the necessary facets and technical capabilities that come with that.
Thanks. Akshit, what's your take?
I think probably the most obvious one, that given the collapse of FTX, there's obviously a need for new types of exchanges. And I'm not going to say we move from centralized to decentralized exchanges, but rather the emergence of more hybrid exchanges, where you're combining both of the existing use cases combined with some of the new elements. For example, the custodies would be on smart contracts, but for order book matching, you still use the traditional centralized servers. But at the same time, again, for settlements, you can use layer 1s, or for clearinghouse, you could do layer 2 services where you kind of, leverage the ZK rollups that are coming up. Also a huge trend that you're seeing this year with Polygon announcing something similar just a few days ago. So I think something in between your current centralized and decentralized exchanges that kind of makes this user experience a bit more reliable, and also at the same time, kind of not a complete pivot from what we're seeing at the moment.
Great, thanks. Melanie, what's the number one thing?
well, I also think CK rollups is going to be a very hot topic, at least in the next couple of months, and with some great projects to launch. And yeah, obviously, again, a round of airdrops that everyone is chasing. But additionally, I mean, also everything privacy layer is just so important now. Else, our promise of getting ownership and getting power back to the people is, you know, just hot air. And obviously, I in the social fi space, so I need to say social fi is the next big thing. Why I truly believe it is a thing, is because it has this power of a greater mass adoption. After the games, I think we will see some amazing games coming out by the end of this year, and they will probably lead this bigger move into mass adoption by the end of this year, when we can see, oh yeah, these are really good games and they can attract a lot of users, and there we will see some greater adoption coming. But SocialFi is definitely coming next, because at the end, everyone is, you know, on social media, on social networks, and everyone has seen there needs to be a fairer exchange between platforms and also the user bases that basically are the fundament for building a social network.
Great, thanks for sharing that, Melanie. Michael, what's your number one trend you see?
Yeah, I'm going to keep it short. I mean, you have to distinguish between what I think will happen, what I hope will happen. So what I hope will happen is we're going to finally see some in-game content in NFT form to actually fulfill the promise that you can actually own your, your in-game items and actually resell them. I think that's a tremendous opportunity for game developers. And I think once you actually start doing that, the big players will not get around to do that as well. And the other thing I really hope is going to happen, that we get better wallets for better wallet user experiences, because people are still just too afraid to actually have self-custody. And I think that's really the biggest barrier, that if we don't solve that, we're never going to have mass adoption. That's why.
Great, thanks. Fantastic. Then, I mean, just to conclude on that, I think two topics from our end that we definitely going to see are the main trends going forward is one is digital identity, right, as a kind of a main adoption scaler. And then the second is obviously the intersection between AI and digital assets, which is going to have massive unlock of use cases. I would like to thank you so much for staying with us today. I think when, time flies when you have fun. We're already over time. It didn't feel like an hour. We were also not able to answer all the questions. So we're trying to coordinate that with the colleagues from Crypto Valley to see how we can do that after the webinar. Thank you so much for staying. I hope the audience enjoyed it, and have a great day.
Thank you.
Thank you.
So much.
Bye.
Thank you, everyone.
Thank you.
Bye.
Bye-bye.